So here we will start analyzing this chart by looking, or rather identifying the structure of the market. And looking at this market, we can see it's an uptrend forming higher lows, higher high, higher low, higher high, higher low, higher high. Changed character for a little bit and then had a correction, higher low. So we are anticipating a higher high to occur. So we are done with the first step, which is identifying the market structure. So here the market structure is an uptrend. After we are done with the market structure, the next thing we want to identify is the recent price leg that led to the break of structure. So for this case, this is the recent price leg that led to the break of structure. So what this does, it helps us identify where the market, or rather it helps us form up an expectation of what the lower time frame will do. And the other thing it does is it does help us identify the demand zone which were responsible for the break of structure. So for this case, we will start by looking at the demand zones which led to the break of structure. And for this case, so these are the two demand zones that are responsible for the break of structure, the immediate demand zones. We also have others, but we don't need to look at them right now. So these two demand zones are the ones which are relevant. So from these two demand zones, we look at the demand zone which makes more sense to us and has more confluence. So from here, we'll go to a lower time frame so that we can get a deeper detail of the market. So in this case, we'll go to the 1 hour time frame and see how price reacted to this demand zone, and from there we can make a decision on what to do or if there is any setup. So on the lower time frame, this is the part that we want to see in deeper details, how price reacted to the demand zone, and this will help us know if we should be buying or staying out of the market. So for this case, I'll be using 1 hour time frame, though I usually use 15 minutes, but it's because there's a lot of price action going on here. So the 15 minutes have a lot of noise at the moment. So looking at this recent market, or rather the price and how it reacted to the demand zone, we can see the minute the price hit our demand zone, it started forming a small uptrend, and on the upper side, after the change of character of the downtrend, there was a formation of a resistance zone. So here we have two details. A resistance zone is being formed and an uptrend is being formed, that is showing how price is reacting to the demand zone. So you can see this resistance being formed is strong. So the recent price has broken the resistance zone. So that's where we get a setup, because this is the trend line, and the trend line is being respected away from the demand zone, and the resistance zone has been broken. So with those two details, the next thing we want to do is the price will definitely come back to the demand zone, which led to the break of the resistance zone, and that's where we want to get into the market. As you can see, there was a change of character. And after the change of character, we can clearly see there's another break of structure right here. So there's a break of structure after the change of character. So with those two details, we can clearly see that the chances of this trade going our way, the chances are high, because the order flow of the market has changed from being a downtrend, uptrend, and the price is reacting very well on our demand zone. So, and the price is still within our trading range, as you can see. So within the fractal market, the 1 hour time frame, we want to find the demand zones, or rather where we can wait for price to come before going back up again. As you can see, the trend line is being respected very well, and you also have to set your TPs. As you can see, you have to plan your trade even before you get into the trade. As you can see, I already have my TP2 and TP3. Your first take profit should always be within the range where you are trading. That should be your first take profit, and you should make sure that your chart is not so cluttered with indicators and everything. So just do price action, a clean price action which you understand best. So unfortunately, the price did not hit my TP1. It came so close, a few pips to my TP1, as you can see. Yeah, my TP1 was just there, and then a few pips to my TP. Price started going down, and after this happened, I decided to scale in on this position by securing some of the profits which I had, and then using the profits which I have secured, I decided to place a trade with the same risk as the secured profit. So this is just a live recording of how the trade went. And this is just to show you that it's not always in the market that will be right. You can have the best strategy, but how you manage the trade really matters a lot. And for me, I can't say I managed the trade bad, but what I can say is it was just not my day for a win. This trade finally ended at on breaking even. I never secured any profits, but I also didn't lose anything, so that's all I can say. It was worth the trial because the upside was great. Finally, the price did go lower to my entry point, and even if I was to put my trade on break even without scaling in, I could have been stopped out either way. Yeah, it hit my entry point and then went back up. So it came down, hit the 4-hour trend line, as you can see here on the chart, and then there was news, high impact news, which was to come in at around 16 hours. As you can see, currently as I was recording this, it was 14:42, so it was just an hour and a few minutes on top. Yeah, so it was unfortunate for me because I ended up closing the trade break even, but we live to see another day. That's all I can say. Yeah.